Good morning, everybody. It is Tuesday, April 2nd, 8:46 a.m. And well, today is one of those days that we haven't had in a pretty long time. It's a red day. It's a red day in the stock market. And it's one of those good old-fashioned red days that we have not had, I think, in a good month, like where you wake up and just everything is red. Yeah, we haven't had that in a while. Bitcoin right here. Bitcoin was at 71,000 yesterday. Currently, it is at 65,466. Nasty drawdown. Why is it happening? We'll talk about it in a second. Kind of, what are the forces that are at play? What are some of the inflows on the ETFs? But this is a pretty tough it did drawdown on Bitcoin because I don't think anyone expected this drawdown as well. That's another reason why it's rough to see. Disney is down 1%. Palantir down 2.19%. It is 36 cents away from going below $22. Tesla 172 at 9:30. So in about basically 40 minutes, we will get the results on the deliveries for their Q4 numbers or Q1 numbers, and we'll see what happens. But that one is down. MicroStrategy down 8%, 7.59%. NVIDIA, 891. That's down another 1.9%. Robinhood, 1838. That's down 5% in the pre-market. Obviously, Bitcoin falling is going to negatively affect a lot of these stocks in the Bitcoin ecosystem, Robinhood being one of them. SoFi, 707. That's down. S&P 500, 519. That's down almost 1%. Apple, 169. That is down. And then CleanSpark, 1790. That is down 3.66%. So we're down. It's a red day. We'll talk about why it's red. Quite frankly, I don't think it's that big of a deal because we kind of needed some red. It's been very green, and you would imagine there would be some profit taking and some overall volatility in the broader equity markets, given the S&P has been green, I think 25 out of the past 27 weeks. I don't think it changes the cycle for what's going to happen throughout the rest of the year, but we'll talk a lot about that. We'll talk macro, and we'll try to make sense of what's going on today, this morning. Thank you, everybody, for being here. Bhaskar, Michael, Brad, Lord, Dougie Fresh, Richard, Kim, Autumn Soul, Gerald, Hans, Greg, Big Thrift, Tom Brady, Win, Brian Cheng, June, Sasky Rose. Delivery numbers are not at 4:30. They're at 9:30 a.m., from my understanding. So literally in 40 minutes, we should have the numbers, and then we'll see how Tesla reacts as soon as the numbers are out. Maybe they'll come a little bit earlier before that, but we'll have numbers pretty soon. Mr. Seymour Duck, Stathis, Sethi Roth, Tabor, Golden Eagle, Jocelyn, I'm Beneficial, Mitch, Aurelio, Lussy Picker, Tony, Colorblind Collector, Jonathan. Thank you, everybody, for being here. Tony, Quest Fresco, Matt R. Thank you, guys. All right, let's get into it. So, stocks are down. Stocks are definitely down. And let's go to the reasons for why the market is a little volatile right now. Let's start the segment off with macro. After this, we're going to talk about Palantir. I broke some news last night on Twitter around Palantir and a new company they invested in, which is actually a really interesting company that they invested in. So I want to talk about that and kind of what's going on with that company, and then we'll talk about Bitcoin as well. Okay, so why is the market down? One of the main reasons that I'm looking at is this 10-year Treasury yield is spiking up. Yeah, right now, if you take a look at this, it's spiking up pretty aggressively. As Jonathan says in the chat, 4.4. Yeah, basically 4.4, 4.397. So we haven't talked about the 10-year Treasury in a long time, but because it just wasn't needed to talk about, right? Because it was down. But as the 10-year Treasury goes higher, it means that the bonds are selling off, right? And that means that there is less money going into equities because then people end up coming into those bonds to buy them when they do sell off. It's like an inverse type of relationship here. That is bad for stocks. If you can get 4.393%, as we're looking at right now on a 10-year, why would you put your money into equities? Now, the argument for the past couple of months have been, well, equities are giving you much better than 4.3%, much better than a money market fund. And yes, there's some risk associated, but the risk is pretty minimal because if the 10-year, which got down to 3.85, is not giving you anything, it's all about where do people allocate their capital? Where does the money go? How does the money adjust itself? And who picks where there's going to be compounded annual growth in terms of like legitimate returns for a portfolio? Either it's in a bond, it's in the markets, or it's in money market funds. And for the past 4 or 5 months, markets have decided it's Nvidia, it's Palantir, it's Robinhood, it's the S&P 500, it's SMH, it's AMD, right? So the market has decided it's not a money market fund, it's not a bond, it's going to be equities. Well, why does the 10-year go higher? If you remember when we were at almost 5% on the 10-year, that was back in October 2023 when we had a nasty decline in the market. It's because inflation seemed sticky and the market decided, well, wait a second. If inflation is sticky, then why are we going to invest in equities? Because the Fed's not going to be lowering rates anytime soon because if inflation is here to stay, the Fed has to keep rates higher. We are going to pay $1.3 trillion by the end of this year in interest debt on top of the debt that we have right now if we don't lower rates. But one could argue that's the cost you have to pay in order to stop inflation. So the 10-year is rising right now because the market feels that inflation is going to stay longer than expected. Now, it's a little weird because we have the CPI numbers already. We have the PPI numbers. Like we had all the numbers that would lead for the 10-year to go higher. Remember when the CPI, PPI came out last week or the week before that and the market rallied? Like the market didn't really care about it. It's odd that now it's starting to happen, but it's kind of like reality setting in certain levels for the market. On top of that, we had PCE data come out on Thursday, which wasn't the best. It wasn't horrible, but it wasn't the best. It was kind of in line. It ultimately signaled to the market that Jerome Powell's not going to be able to cut rates anytime soon, even though he says that he will be able to cut rates 3 times. Most people do not believe him at all that he will cut 3 times. And as a result of that, equities are going down. Equities are going down because 10 years or bonds are going up. 1780 right now on CleanSpark down 4.2%. Palantir getting hit 2.23%. Trump's back down about 0.62%. Now here's the question, right? PVH, this company, we talked about them on the market close yesterday. This is the company that makes Tommy Hilfiger and Calvin Klein. They're down 22%. And there's probably a reason why. And I mean, it probably does not deserve to be up this morning. We'll talk about their earnings. The question here is, what is the psychology that's going to take over? Is it going to be the psychology that says, hey, the dip is ready to, this is the opportunity. It's time for us to buy. Or is the psychology going to be, you know what? We're due for a correction. We need 5%. We need 10%. We've been having way too much fun in the market. Let's actually see some downside momentum. And I mean, I think it can go either way. In my opinion, I think people are going to buy the dip. I think, Palantir at $20 is going to be harder to get that below 20 because people will be buying that dip. But could it happen? Yeah. Same thing with Tesla. If Tesla falls today down to 160, we'll talk about Tesla in a second based on bad delivery numbers. I think people will be buying that dip. I don't see a catastrophic crash coming. I do see a pullback coming. That's totally fine. It's just a question of how bad would that pullback be given the appetite people have to still be in the market. So we'll see. We'll see. Unbeneficial says there's some overextended stocks, but there are plenty of worth dip buying opportunities. Yeah, because again, the question I think in the macro comes down to like a fundamental argument or a fundamental thesis someone has to have about inflation. If you think inflation's coming down within the next 4 months, which means on the 5th or 6th month, we will have a rate cut, how does the market react to that? I think inflation is coming down. I think there's plenty of data showing us it's coming down. It's being sticky. It's being annoying right now, but it will come down. The Fed eventually will cut. It's an election year. Like, you know what I mean? You got to remember all of the reasons why sort of 2024 is setting up to be the way it is versus all the bears coming out saying that, the bears who have been calling for the S&P to collapse to 3,600 now that it's at 519 instead of 524, they're saying they told you so. Like, they're going to go for that victory lap. The problem is I don't think that victory lap can last long enough for them to be correct. Because also, if you take your money out of the markets, where are you going to take it? Where are you going to take it? That's the hard part. Lumber is going up. Oil is going up. Inflation is coming down. So I agree. In certain sectors, oil, for example, is starting to creak up a little bit more, right? And there are a bunch of things in the economy that are seeing increases. But the thing to remember, though, is yes, oil is going up, but oil is down almost 3 months in a row on CPI. So WTI crude right now is at 84.91. I agree. We were at 70, I think, a month ago. So that is up from there. But it was down overall over the past 3 months. Now, the next CPI, maybe it goes higher, right? Given some of the advances we're seeing in oil. But my point is, it's not like $115. It's, the bears want us to go back to 3,000 on the S&P. I just don't know if we're at those levels to get there. My best bet is that CPI inflation's hot and the market has a 5 to 10% pullback, or it stagnates at this level and people buy the dip and it kind of just stays flat here until we have the next positive piece of news to really get us to the next level. Which, by the way, I think it's very reasonable to say the market should not go to 530, 550, 560 on the S&P when it already went to 520 in a matter of 3 weeks, or in a matter of 9 weeks, as over the past 90 days, as the market has gone up 10%, the S&P, which is one of the best closes for the Q1 since 2019. We probably do need to take a break. It's probably more reasonable we take a break. So I think the bears, they're going to try to argue that this is like a reason for why things are going bad. I'm like, I don't know if this is a reason things are going bad as much as, hey, like things don't go up forever. We're going to pull back a little bit. But that pullback is not 2022. And I think a lot of bears think that might be the case, but I don't know if that would necessarily be the case. Let's transition to Tesla. Then we'll talk about Palantir. Here's an update on what we expect for Tesla delivery numbers, and then we'll talk about that further, and then we'll go into Palantir.
Got to touch on this whole short trade, the most profitable short here in the U.S. Today, we're expecting those delivery numbers. In your mind, does Tesla meet those numbers? Does it exceed? Does the possibility of it missing just extend the viability of that short interest traded?
Well, when you're talking about a company like Tesla, and actually the whole EV space, there's a lot of dots to connect. So we want to make sure that we connect the right dots. So looking at Tesla alone, obviously we've seen a fall from grace for a lot of different reasons, some of which have hit the entire EV mega trend, which was very, very hot for a long time as we got through mass adoption. And then reality set in, reality of infrastructure issues, reality of the fact that sometimes you cannot even charge a car if you have a blackout or something like that. The fact is that there has been a tremendous amount of competition. Mm-hmm. Also, that they've sat on used cars lots without being able to resell. Hertz stopped selling them completely, or I should say leasing them. So when you put all of that together, the space in and of itself was under stress. But Tesla is still the pinnacle, right?
So wait, are you? So it sounds like you're focused on a number of fundamental issues. I think one of the other ones we have to bring up, you mentioned competition very briefly, but there's growing competition from Chinese EV makers. So in your mind, when it comes to the long-term story of Tesla, at least also the short term, we're obviously talking about the performance in Q1. How big of a factor is that in the decline?
Well, it's definitely a huge factor, and China keeps coming out with. There was a release this morning of another car. That was a phone maker that came out with an EV in China, and they just set records in terms of orders. Right. So that's going to keep happening in the whole space, even here in the United States. But
so what she's pointing to is sort of the fundamental problems with Tesla right now that's leading to a bit of a downturn in the broader EV space, which she's not wrong about. I mean, Chinese competition hurts people feeling like they have, anxiety with EVs. I mean, all that stuff is there. Interest rates obviously being the biggest one. I just don't know if they're the reasons for why Tesla itself is doing bad outside of rates, which I think is the core reason. If rates were lower, I think people would be buying more Teslas. So Tesla Q1 delivery estimates have moved lower in the past week from 449,000 to 475. So most of the market expected 475. Now it's 449. Thomas here and a lot of other analysts, he works at a hedge fund and a variety of other hedge funds, and Dan Ives in particular as well, says 420. So most of the street is saying, look, we're probably going to get like 50,000 less than what we thought a couple weeks ago, given flat China demand. Arnie posted this right here. Tesla China-made EV sales in March are up 0.2% year over year. Deliveries of China-made Model 3 and Model Y vehicles up 47.5% month over month. So that's some good news that EV sales in China are going up. Now it's going up slightly, right? 0.2%. One could argue that's really not going up at all, right? It's pretty flat. That's fine, but there's something there. And then Model 3 and Model Y is up 47.5% month over month. The key here is what is going to be that core delivery number? Because if that core delivery number is not what the market is expecting, I think it can get rough. And the sad thing is, like, no one expected them to do it on a day like this, where so Tesla right here, 170 in the pre-markets right now. No one expected them to announce it on a day where the entire market was red, but the entire market is red. I mean, on the right-hand side of my screen, AMC is up 2% in the pre-markets. It's probably because it was down 20% yesterday. But I mean, you cannot escape the red today. No matter what you're in, you could be in crypto, you can be in big tech, you cannot escape the red. Oh, wow, Tesla's falling. Oh, is it out? Is 168, is it out? I think it just came out, dude. It had to just come out. Wow. Tesla's aggressively falling. Let's see. I think it has to be out, guys. It doesn't fall that quickly. I I don't have the numbers. 160. Yeah, it's down 5%. It has to be out. Someone has the numbers. Someone has them. Oh boy, these numbers are not going to be the best. They're not going to be the best. I didn't even know I thought the numbers were coming out at 9:30. It's not. I guess they come out at 9 a.m. But then, see, here's the question: at 165, 167, is there enough people buying the dip? Because FSD is really cool. FSD is really, like, I don't know. This is going to be the interesting thing today. Are the numbers not out and it just like went down to go down? That's so interesting. That's so interesting. Okay, I'll keep an update. I have the site refreshing whenever the numbers are out. So most people said 9:30, so I'm pretty sure it will be 9:30. But I feel like Bloomberg or the terminal got ahead because you don't dump 5% that quickly unless there's like a piece of news. So everything is red, and so the question for Tesla is going to be: are those delivery numbers strong enough to overcome a pretty crappy macro, at least this morning, and a pretty amazing FSD? You know, what are you going to do in terms of the push and pull of FSD and the macro kind of heading against you on a day where we get bad delivery numbers? Produced 422. Delivered. Oh, we got it. We got it. Okay. So we got it. We got it in the chat. We got it in the chat. Yep. Here we go. I got it as well. All right. So these are the official numbers for Tesla. Tesla delivered 386,000 vehicles in Q1. Oh my. Dude, everyone was expecting 422,000. That is like, no. People were expecting 475. Everyone brought it down to 420. This is 386. Where's the stock right now? 165. Oh boy. Wall Street was expecting 431,000. This Wall Street expectation was after a revision down from 475. So 386 is not good. Yeah, but it's also like we kind of knew this was going to happen. We knew the Germany factory was shut down for a month because of the Houthis. Like we knew this was going to happen. It's just tough to see that number. Total Q1 production was 433. Tesla says decline in volumes was partially due to the early phase of the production ramp of the updated Model 3 at our Fremont factory and factory shutdowns resulting from a shipping diversion caused by the Red Sea conflict and an arson attack at Gigafactory Berlin. That arson attack happened a week ago as well. Tesla also reported record Megapack installations for the first time on a delivery report, 4,053 megawatts. Let's see what CNBC is saying about this as this number comes out. Let's get their thoughts on it. And then I'll discuss. Not the best numbers, man. Not the best numbers. Definitely tough numbers to kind of reconcile with. Okay, they don't have anything to that yet. So let me give my thoughts on this. First of all, I think that this is bad numbers. I think we all knew this was bad numbers. It was definitely not going to be good numbers. However, even though it's bad numbers, it's also like, can it really get that bad if we all knew this was going to happen? Okay, the market said, yes, it can get that bad. Tesla's down 7%. 163. 163 right now. Oh my God, dude. Oh boy, that's coming down. All right, so here's the question. Here's the question for the chat. Do you think the dip gets eaten up, or do you think it keeps falling? Do you think the dip gets eaten up, or do you think it keeps falling? That is the question here. I don't even know what I would say. I don't know what I want to say gets eaten up, but these are some bad numbers, dude. These are some fun. Dude, when's the last time they did 387,000? I'll run a poll. Yeah. When's the last time? It had to be like years ago. Okay, so let's ask a call. Tesla. Do people buy the dip? Does it sell off? This is for today. Do you think it ends today green, or does it just keep selling off? Well, see, here's the thing, right? So Duarte says Q1 was expected to be bad. Not sure if the dip is bought. If we all knew Q1 was expected to be bad, why were people buying it over the past 2 weeks, right? It rallied to like 182 at one point. Why did people buy if everyone knew these delivery numbers would be abhorrent, which is they are. They're really bad. And you don't blame Elon or the team for that. You kind of have to deal with the fact that they had a lot of things going on that they didn't expect, right? So it's one of those things where it's like, I don't know, but people were people were buying it, and people were buying it without really that much concern. Chamus has got no money to buy the dip. Everything is red. The cult of Musk. I mean, yeah, that's true. Well, I think the answer to that obviously is FSD. That's my answer to my own question. FSD has been keeping people very excited, but I don't know if it's enough to deal with. I don't know if it's enough to deal with these delivery numbers. If you're just joining, 387,000 vehicles for Tesla deliveries. Not the best numbers. Market's upset. Stock's down 7%. And I guess we'll see if people end up buying the dip today. Derek says, hey, I'm here for my morning fix of a minute. Derek, thank you for being here today. All right, we'll get back to Tesla. Let's go to Palantir, and then we'll get back to Tesla in a little bit, and we'll react to some of those numbers. But let's take a look at what's going on in the world of Palantir. So I tweeted this last night, and this was some breaking news that we had to discuss. So let's pull this up right now. Okay, cool. So Palantir has received 256,000 shares of MSP Recovery Inc. LIFW is the ticker symbol as payments for outstanding receivables. We saw them do this with Surf Air Mobility a month ago. They got like, I think 500,000 shares of that company. And then they released a demo with that company about 2 weeks after they disclosed this 13G. So last night, they have 955,000 shares. They got 256,000 as payments receivable from the Class A common stock. What does that mean? That means that this company was not able to pay them cash, so they paid them equity, basically bartered equity for their software, which is a relatively normal thing that bigger companies do with smaller companies. But Palantir has been able to do it many times, and Palantir likes doing it because they like working with some of these smaller companies when it comes to innovating in a different space that they think there's some synergies with. Now, what is MSP? By the way, the stock was up 71% yesterday when this news broke. So is the stock still up right now? Let's see. Tankstead said I bought 4K shares yesterday of what? Of this? Of MSP? Or of Palantir? Yeah, MSP is up 49% in the pre-market. So it's not at $1.14 anymore. It's at 99 cents. I am not buying this. For everyone asking, are you buying this? No. The answer is no. I am not buying this thing. I'm just reporting that this is what happened to the stock. But what is this company, right? MSP Recovery operates in the healthcare sector, focusing on the recovery of improper payments for healthcare providers. The company leverages technology and legal expertise to identify and recover payments made by these entities in error. So we're talking about big data in the context of payments in the healthcare space, which is a massive industry. I mean, so many times insurance goes wrong, people don't pay on time. There's a trillion different things that happen in the healthcare industry. And I went on their website. They also deal with Medicare payments, Medicaid. So there's a lot of things. It seems like they're leveraging big data technology, obviously AI, to be able to do in a sophisticated way. And in my opinion, we know how important the healthcare sector is to Palantir. So there seems to be some synergy with this company and what AIP and Foundry might be doing to power their operations. So that's the news we found out last night in regards to Palantir and sort of what Palantir is doing in regards to finding other companies to invest in and being able to leverage some of their momentum. Now, Palantir stock is down. So that news is not enough to really, rally the stock by any sense. 22.13. It looks like we're falling below 22 this morning. If I had to give my best bet, just because this market looks like it has no legs to it right now. It looks like it's going to take a shit, basically. It's going to take a dump today. I think we're all expecting that. The question is, are people going to be ready to clean up that dump, or is it just going to get messier? And as of now, I don't know. I really don't know. I wouldn't be surprised if it gets messier because we've had a very, very good 3 months, and it is what it is. It's funny, though, because this could be how we start Q2. This could definitely be the way we don't end Q2. Like Q2 goes well. This could be a blip in the radar in terms of, all right, we're down for a little bit for a couple of days, maybe even a couple of weeks, but Q2 overall is pretty strong because companies put up good earnings. It's just a question of the appetite to be able to invest in these stocks. Like if Palantir puts up a monster earnings, does it stay stuck at this level? Right? I don't know. Does it get back to 27? It's harder for me to imagine that we fall back to 15, 16 outside of the entire economy getting a little wrecked, which I think it can get wrecked 5 to 10%. I don't know if it gets wrecked, 20, 30%, like a lot of people think could happen over the past 3 months. NVIDIA, 887. Tesla, wow, 162. Tesla's down 7% on the day. Tesla is down 7% on the day. Ryan says rates have these markets by the balls, so it doesn't matter. I agree, but it is kind of weird because rates have had the markets by the balls for like, I don't know, the past 6 months, and the market's ignored it, right? The market's not really cared. It seems like now, after a good Q1, the market's kind of settling in and they're kind of accepting the reality of interest rates. Even though we know that Jay Powell said we're going to get 3 of them, it's just no one believes we're going to get 3 of them. So if we're factoring in 1 or 2, I guess the market's kind of readjusting. Bitcoin right here. Let's talk about Bitcoin. So that was the update on Palantir. We'll go back to Tesla and keep taking a look at the stock and seeing what's happening there. Let's talk about Bitcoin, because Bitcoin also is getting hit. Oh, well, let me give you a quick update on Tesla right now on CNBC, and then we'll do Bitcoin. Then we'll talk Bitcoin. All right. So here's the update on deliveries.
Stock is down. Deliveries in the first quarter of 387,000 vehicles. Let me put that into some perspective. The FactSet consensus as of Friday, and it had been coming down, was for 457,000 vehicles to be delivered. First quarter of last year, the company delivered 422,000. So this is a year-over-year decline, the first since 2020 that we've seen from Tesla. And in terms of production, the company produced 433,000 vehicles. They do point out the fact that they had the change in the ramp up in production in Fremont as they come up with the new Model 3 Highland edition. They also had the Red Sea issue, also the issue with production at the Gigafactory in Berlin. Not said by the company, but clearly one of the main factors, guys, what's happening in China. And we know what's happening there as they have lowered their production, and we've seen the announcements or the reports come out of China, and that clearly has an impact here. That's why the stock is under the pressure that you're seeing right now. Again, 387,000 vehicles delivered in the first quarter. The street was expecting 457. Even some of the bearish analysts were expecting, 410, 415, not 387. Guys, I'll send it back to you.
Quick. Sorry. No, I was going to say, Phil, full year estimates, I guess we can say goodbye to some 2 handles, right?
Oh, I think that's a given. I think that's a given. Most were already bringing them under 2. We had a few people saying 1.91 million deliveries for the year as the estimate that they were putting out there. For some perspective, and I don't know if we can pull up the chart that we have showing annual deliveries, they delivered 1.81 million vehicles last year. And if they were to go to 1.92, 1.93, that would be about an 8% increase in deliveries. Now the question becomes, do they hit 1.81 million? Is there a possibility that they don't even make that? That possibility is out there, but it's early and a lot of things can change. Obviously, production is likely to come back much stronger and deliveries should improve in Europe. They've been clearing out a lot of inventory in the first quarter. And if things start to firm up a bit, then certainly we expect higher numbers in the second, third, and fourth quarter. To what extent remains to be seen. China's the wild card in all of this, guys. They are brutally competitive in terms of what's happening with EVs and EV pricing, and that's having an impact. There's no doubt that that's having an impact on Tesla. And remember, Shanghai is not just where they supply China, but that's also where they supply other markets around the world. So they can offset some of the impact of just pure China and the competition there in terms of vehicles being shipped to other markets out of the Gigafactory in Shanghai. But there's no doubt that this competition in China has had an impact.
Now, Phil, I know that the United States is not at the fulcrum. It is China, and I know the problems in Berlin, but there's this kind of this newfound, we don't want to go electric. We want ICE. We also are willing to have hybrid in this country. It has reached
Americans are embracing hybrids right now.
But it's not what. If you're someone who wants us to electrify and get off of nuclear, go to nuclear and get off of coal and get off of nat gas, it's not going to come together at that level.
No, but that's not how consumers think, Jim.
No,
I think there's very few people in this world who sit there and think, well, ultimately, is the fuel source for this a coal-burning power plant? Is it nuclear? Is it hydropower? That's not how consumers think. You know that. The way a consumer thinks is, what's the best option for me price-wise? And then also, am I comfortable making this transition? And there is no doubt that the recharging issues in this country are a huge issue. The first adopters, they could live with it. not the people who are now looking at buying a vehicle now. And I hear this time and again from my friends who are considering buying an electric car. Almost all of them say the same thing. If I'm in Chicago and I've got to drive to Cincinnati or St. Louis or Minneapolis, I ain't doing it in an electric vehicle.
We test
and
drove the
otherwise, I
Rivian.
got to sit there and plan
You're
some
so right.
ridiculous charging.
We test drove Rivian. All I could think of was like what happens on 95. On 95, like, am I going to push it to a road, to a rest stop? I mean, it's worry.
Hey, Phil.
Sorry about that, guys. The computer was getting a little weird. I had to exit out of the tab. Okay, so obviously those numbers were not the best for Tesla, and we're seeing that reaction right now in the stock price. Yeah, my Mac is being weird, dude. If I have like 5 tabs open, it starts spazzing out, and I'm like, I didn't buy this Mac for it to do that, so that's a little concerning. So hopefully, maybe I just have to delete a ton of like videos or stuff I have on the computer. Not those type of videos. The videos I make for YouTube every day, I store them all on the computer, so maybe I just got to clear out the Mac. But that's what we're seeing right now in the context of Tesla, and obviously it's pretty rough. Stock price here, let's go to it right now. As Nate said, the last time they did this was Q3 2022, 163 right now on Tesla. I mean, it's a pretty bad drop, down 7% on the day. And we're seeing the market basically kind of deal with the fact that we have a tough drop. Now, the question is going to be, I guess, how bad does this drop really get? And I don't know. When the market opens, dude, we haven't seen 150s on Tesla. I think when's the last time we saw 150? Let's see. Last time we saw 150 on Tesla, let's pull up the max chart. 150-ish right here. October 2023. Not October, April 2023. It looks like April was the last time we really got to those levels. We didn't get to 150 this cycle. We got to 161. That was the lowest. We didn't hit 159. At least that's not what I remember. So April 2023. It looks like this could happen today if the street just gets upset. Palantir is down as well. 2206. That one looks like it's coming down below 22. I will be buying the dip on Palantir today. That's what I'll be buying. So I'll be buying that one. But when it comes to Tesla, I don't know. I mean, obviously, if there's a bad dip, I tend to go Palantir over Tesla. We'll see how bad the Tesla dip gets, though, dude, because if it gets to 150, again, FSD is a real thing. And I think the real Tesla bulls are just like salivating to be able to get their hands on buying some more Tesla, given the fact that they know what FSD is like. And they're going to be very grateful for the market giving them the price that they're going to give them today if it gets really upset. But I think we're going to have to see how bad does it actually get for the market to feel that way. Let's see how other people are feeling. So let's go to Sawyer Merritt's Twitter. Rivian. Also, we have some news. Rivian announced Q1 deliveries of 13,588 vehicles versus 11,893. So Rivian beat by 2,000. Is Rivian up right now? Rivian is down. Rivian's down 3%. Okay, so that was not enough to help Rivian. But they have 13,000 vehicles. So let's see what people have to say. Let's see. What are the tweets here? Most people saying, yeah, it's bad. You have to go back to Q2 2022 to see those delivery numbers. They cannot be attributed to the Red Sea conflict nor the Berlin incident, and the ramp of the new Model 3 has been a slow launch from the first moment. A lot of people smelling a buying opportunity. Yeah, a lot of people kind of expecting that they knew it was going to be bad, but there's not much they can really do about it, given that people knew it was going to be tough. If you're wondering why it's down, again, the core reasons are China demand slowed down, Chinese competition. Number 2 is Berlin factory shut down because of the Red Sea conflict. And number 3 is because of interest rates. I mean, you put those 3 together and you get a pretty crappy quarter, plus the Germany arson attack as well. So just wasn't good, right? It just wasn't good over the past couple months. Down 8% now. Oh boy. Oh boy, oh boy, oh boy. Palantir 2208, Tesla, wow, 162. I don't know if it sees 159, dude. I'm curious if it sees the 150s. It either dumps as soon as the market's open or people buy the dip. It's one or the other. It's really one or the other. I don't think it stays flat. I think it either goes up or it goes back down. And we're going to see MicroStrategy down 8%. Oh, Bitcoin. All right, so let's get into Bitcoin. We didn't get to get Bitcoin. Looks like it's trying to go to 64,000. All right, so why is Bitcoin struggling right now? Why is Bitcoin struggling? Well, one of the reasons that Bitcoin is struggling right now is because of the outflows from Grayscale. So let me pull up those numbers right here and show you guys kind of what's happening right now. Grayscale offloaded a lot of Bitcoin last night, and that kind of upset the market, or at least it gave a little bit of an explanation for why Bitcoin is coming down. Again, Grayscale Bitcoin Trust, a lot of outflows are coming because investors are leaving that fund and they're going into other ETFs. So net, we had $85 million of outflows yesterday. As you can see right here, Grayscale let out $302 million. Kathy's fund lost about $300,000 in inflows. Fidelity brought in $44 million. IBIT, BlackRock brought in $165 million. The rest of them basically flat or zero. And so we had a net outflow of 85.7. Now, it's weird because over the weekend, we were pretty strong at this $71,000 level. And it seems like the outflows plus kind of the I would argue older people that are in Bitcoin started taking some profits. The reason I say that is because we're seeing some charts show that as Bitcoin is falling, it's coming from wallets that have been around for a while when it comes to Bitcoin, right? And you see a lot of this stuff happen when people are just ready to take their profits if they've been holding on for a long time. So last night, we had Bitcoin below 68,000. So, okay, it fell down from 69. Get it. Totally fine. That was at 10:37 p.m. By 10:39, 2 minutes later, we were at 66,450 or 1040. So 3 minutes later, boom, you're down another 2%. And when that happens that quickly, it means that there are people that are liquidating. It means that there's leveraged longs either getting liquidated or shorts or piling in, or there's just a lot more momentum from older wallets that have been around for a while that are getting out. And that creates a little bit of a chain reaction, because when you see a wallet from 2019 or 2013, 2012, some of those OG wallets start to burn their Bitcoin and get out of here, you get a lot more people thinking, okay, if the OG people are leaving, I should be leaving as well. I mean, there's a lot of dynamics for why the price is going down, but the point it is incredibly volatile. Now it's holding 65 to 70 pretty well, or at least in the $60,000 range, which people probably didn't expect before the halving event. But the halving event is coming up, and a lot of people are also questioning, well, wait a second, if the halving event is baked in, or if the perception of the halving event is baked in, then maybe it's going to be a little bit tougher to get the 80, 90,000 Bitcoin we want quicker. Now, all of the ideas are still in place when Bitcoin has the halving event, 10 to 18 months after, there is a quadrupling of the price. So that seems to theoretically still be able to happen. The question is if it will happen. And I guess we will see if it happens over the next few weeks. Jonathan says, I would slap Elon. I'm a shareholder. Like 20% of my money has been tied up into buying the dip on the stock, and this clown only focuses on politics. Look, I understand the reason for why people are upset at Elon for focusing on politics and Tesla stock being down, but genuinely, I don't think Tesla stock is down because of him tweeting about politics. I think it doesn't help. I think Tesla stock is down because, as Tesla just said in that press release, the Berlin factory was shut down and they had to ramp up the Model 3 production in Fremont. So like, I think there's more structural issues right now. Now, if you wanted to make the argument that his focus on politics is diverting his focus on being able to navigate some of these tougher business challenges and for him to still deliver shareholder value, even though it's a tough situation, I would agree. I would be like, yeah, I mean, like maybe if he wasn't that focused on politics, he could divert a little bit more attention here. I just don't know how much of that attention would be enough, truly enough, to overcompensate for the fact that rates are high and that macro and geopolitically, we're just not in the best environment to be able to sell EVs. I mean, it's just something we have to deal with right now. And so that's what we're seeing in the world of Tesla. For those that are just joining, 387,000. We'll see where it ends up, and we'll see how the market kind of takes it. But so far, not doing the best. So far, not doing the best. Are you using a vibrator mitt? No, my leg just jumps up and down. Like that's that's why I always have my leg jumping up and down. I think they say people who are like on blow do that. I'm not on blow, but I've just always done that since I was little. All right, Bitcoin below 65. There you go. 64,000 on Bitcoin. You know who's smiling right now? You know who's smiling right now? There's someone on planet Earth who is smiling so happy right now. They're so happy. And his name goes by Meet, and his second name goes by Kevin. Meet Kevin has to be the happiest person on the planet right now, because when Tesla rallied to 180, when he sold at 165 or 169, he got the brunt of it. He got the brunt. Chris is the second happiest person behind Meet Kevin. Chris is the second happiest person. But Meet Kevin has liquidated his Tesla. He's gone. He's out. He's got to be so happy that it's out, because I mean, it's proving he was so far correct on the short term. Long term, and look, long term he's bullish, but on the short term, this was a short term move. He plans to get back into Tesla, but for now, he's not. You know, he wanted to be right that Tesla would suffer, and so far it is. Okay, so let's make this tweet, and then we'll get into the market open. We got 2 minutes. Tesla deliveries came in at 387K. The street wanted 430K. Bruh. There you go. All right. So we now have about 1 minute and 10 seconds to see what happens at 9:30 a.m. as this market opens up. 164. Dude, I want to be contrarian, and I want to say the dip's going to get eaten up and this thing's going to rally right back to 170 by the end of the day. But in my heart of hearts, I don't think that's going to happen. I think like there is no good news over the next few months for Tesla outside of the perception of FSD, which is good news, but it's not real yet. Like, it's just not real. People are not paying the $12,000 a month or a year that Elon wants people to pay. So I don't know. It's gonna be really interesting to see how it turns out. 40 seconds till the market opens. Palantir 2203. Let's just call it 21. It's gonna fall below 22. It looks like. Again, the big thing today, guys, is are there people willing to buy the dip today? We'll know within like the first 20 minutes of the market open. We will know if there's people willing to catch these knives, or will they let these knives continue to fall? I mean, it's going to be one of the other. And in 15 seconds, we will see how the market's reacting to a pretty violent pre-market with a macro and a 10-year that's inching up to be a lot higher. All right. Thank you, everybody, for being here at 9:30 a.m. Tuesday, April 2nd. The stock market is now open. All right, wake your ass up. Here we go. Look at Palantir, flat at 22. Palantir is just flat at 22. It's like stoic. It's literally stoic. 2201 for Palantir. It's not falling below the $21 level yet. It seems like there's tons of money ready to buy it right at 22 and sell at 22, which is why it's flat. Rivian, 1074. So we got Rivian at 1074 down 3.16%. Tesla 164.90 down 5.8% of the day. Not as bad as 162, but it is still down 5.9% on the day. AMC, it's up 0.96%. They were down 22% yesterday, or they were down like 15% yesterday. PVH, we'll talk about them later. They're down 20%. They make Tommy Hilfiger and Calvin Klein. The TLDR is they're growing 2% year over year, and that's just not enough to grow a clothing company. So they are down 20% of the day. Market cap now 6.7 billion. Revenue is 10 billion. Save Spirit Airlines, they're down 2.6%. DJT, Donald Trump's company, down 0.44%. Nvidia 884 down 2.17%. IWM 205. Bitcoin 64,925. Google 154, actually holding up pretty well from yesterday. Robinhood down 5.98% on the day, down 6% basically. 1818 on the day. Microsoft 421. SoFi 703, looking like 3 cents away from falling below $7. So we got SoFi at 705 right now. Celsius, Celsius down 3%. Celsius at the $80 range. The thing about the market when it's red is that it's red. And everything is going to deal with the red. There's really nowhere you can hide. I don't see any green today. Where's the green? I see zero green. Canopy Growth Corp. So that's a weed stock. That's green. ET, that's green. More of a value play. Oh, Verizon's green. And Altria's green. So you got some sort of core basic value stocks. Chris is big into Verizon. Steve, friend of the channel, is big into Altria. And he's big into ET, Energy Transfer. These are red. Almost everything else is green. CrowdStrike's down 2%. Palo Alto's down 2%. Walgreens down 2%. Oracle down 0.7%. Mercado Libre down 1.91%. Nubank down 1.69%. Let's go to the semis. Broadcom is down 2%. ASML down 3%. Intel down 1.42%. SMCI down 5%. Now below 1,000. AMD down 3%. 177. NVIDIA 884. That's down 2% as well. ARM 124 down 2%. TSM 140 down 0.99%. All right, let's go to the crypto stocks. This is going to be pretty bad. Riot down 7%. Marathon down 8%. CleanSpark down 8%. CleanSpark also did an offering the other day, which wasn't the nicest thing. Coinbase 239, dude. Coinbase was at 280 like 5 days ago. Coinbase is down 5.35%. I think people will be buying the dip on this one. Robinhood 1835 down 5.56%. Bitfarms 5.37%. MicroStrategy 9.9% down on the day, down 10 freaking percent. MicroStrategy was at $2,000 last week, or $19.99. Now it's at $1,400 or $1,470. VIX is green. Yeah, VIX is green. Makes sense for the VIX to be green. We are in a volatile ecosystem. Cypher is down 16%, and IREN is down 10%. HUD 8 is down 9%. Bitcoin, nasty fall, dude. We were at 71 for like 3 days. Now it's 64. Maybe a last minute shakeout before the Havoc event. That could be happening as well. But that one's down. Apple 168. So Apple's getting the brunt of it. Tesla now 165. Google 154. Google holding up pretty damn well. And the reason for that is because Google already took its fall over the past couple of weeks when it went to 130. So Google actually not as bad at 154. Meta 486. Microsoft 420. NVIDIA 882. Amazon 179. And then Tesla here at 164 on the day. Trump is up. Oh my God. Is Trump up? That's hilarious, dude. Wow. Trump's up. Trump's up. You cannot bring this man down. Trump is up on a sea of red. This is your green stock. On a sea of red, this is your green stock, up 3% on the day. You got to love it. This is incredible. Where's Reddit? Where's Reddit? Reddit's down 4%. Reddit's still up from the IPO price. Palantir 2190. There we go. We got the dip on the Palantir. We got the dippy dip on the Palantir. We got the dippy dip. The dippy dip is here. It is here. Robinhood 1817. That one wants to look like it's falling below $18. And then Palantir 2188. Well, for those that wanted the dip, I mean, we got it when it came to Palantir. I mean, I know a lot of us have been waiting for that on Palantir. So there it is. There you go. It is. Well, maybe it gets worse from here, but it is here. It is bad. Palantir fighting back for that 22 spot. So it's back to 22. So at 2180, there were plenty of people willing to buy those shares as it goes back up to 22. Down 3.5% on the day. Let's see if it either retains 22 or if it falls right back down to that 2180 level. But people were there. People bought it. It was 2180 for like a good 70 seconds, and then it got eaten up. We'll see if it continues to fall back down. Tesla 165, Rivian 1043, down 6%. CleanSpark, oh boy, 1685. This thing was $24 last week, guys. It was $24. The at the money offering really made people upset. And then obviously Bitcoin falling today also made them upset. So that one's down. Robinhood 1820. People are saying, is this a good dip on Robinhood to buy? Look, I think I like 1825 on Robinhood, but again, and I've been saying this pretty consistently, Robinhood is still correlated with Bitcoin. So if you say, hey, is this a good dip to buy? No, if Bitcoin goes down to like 55,000, this is a horrible dip to buy because Robinhood's screwed. So really, Robinhood, I believe, has done a phenomenal set of announcements over the past few weeks, and obviously, you know, the gold card, all that stuff. The problem is Bitcoin is still highly correlated with Robinhood, which is a problem today, but it's really good when Bitcoin's at 75, 78,000 if we get there. So if you are buying Robinhood right now, you are basically saying you don't think Bitcoin's falling below, call it 62, 63,000. If you think Bitcoin's going to 55,000, this is not a dip you want to buy, because Robinhood, CleanSpark, MicroStrategy, Coinbase, all of these guys, they're going to fall. Like it's not that complicated. They're going to fall. So it's a question of, you know, do you want to DCA or do you want to wait till Bitcoin falls even more? There is a short report that I want to show up real quick on MicroStrategy. Carisdale Capital. So this is the company, Carisdale Capital. Let's go through this real quick. I thought this was really interesting. So let me pull this up because I think it goes in hand with what I'm saying around Bitcoin stocks and if you want to kind of buy them. So MicroStrategy is down right now. Why is MicroStrategy down? Well, obviously Bitcoin's down, but Carisdale Capital says, good morning. We're short MicroStrategy and long Bitcoin. Crypto trades often get carried away, and MicroStrategy is no exception. The Bitcoin price implied in MicroStrategy shares is now at over 177,000. They're basically saying the amount MicroStrategy is worth, or the premium, the delta it's been giving to the Bitcoin price, would imply that Bitcoin is 177,000. Obviously, Bitcoin is not 177,000. And they say that's an unjustifiable 2.6x from the spot price of Bitcoin. No fundamental reason for this level of premium exists. MicroStrategy doesn't provide unique access to Bitcoin. Buying Bitcoin in the equity markets is easy and cheap through an ever-growing number of low-fee ETFs like BlackRock, Fidelity. Bitcoin accounts for 97% of MicroStrategy's valuation. It's a software business, is tiny relative to its Bitcoin hoard. If MicroStrategy's Bitcoin is valued at current prices, the stock is worth $800 or 60% lower than MicroStrategy's present share price. The bulls tout the lack of fees versus other Bitcoin investment vehicles, but BlackRock and Fidelity only charge 0.25%. This modest level of fee avoidance is not worth paying for more than twice the price of Bitcoin. MicroStrategy has issued converts and equity to buy Bitcoin, and the massive dilution has resulted in minimal gain in Bitcoin owned per diluted share. Shareholder value creation on a per shareholder basis has been largely driven by simple Bitcoin price appreciation, just as holding Bitcoin would. And they basically say this is, you know, one of those things that's happening in crypto, but it's not like something that should be seen as a meaningful proxy play. Now, this argument definitely is not unreasonable. You could say that, look, MicroStrategy does not deserve to be trading at the premium of 2.6x, basically 3x the spot price of Bitcoin. However, I don't think it matters. I think if Bitcoin goes to 100,000, MicroStrategy is pumping to the moon. Same thing with CleanSpark, same thing with Coinbase. All of these crypto companies, the shorts maybe are the short, you know, reports may be arguing, well, if Bitcoin comes down from a technical perspective, MicroStrategy is overvalued, blah, 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 blah. It doesn't matter. If Bitcoin goes up, FOMO will kick in. People will buy these stocks. So from my perspective, if you want to buy the dip on MicroStrategy today or Coinbase, you have to really ask yourself, do you think Bitcoin is going to go down or not? Because if Bitcoin keeps going down, these things will keep going down. If Bitcoin goes up, these things will go up. I don't think we're going to see the divergence of MicroStrategy being stuck at like, you know, $1,000 and Bitcoin's at 100,000. That's just not happening, especially because MicroStrategy would be sitting on, you know, close to $20 billion in profits on Bitcoin. The street's going to give them a valuation, even if that valuation is a bit intense in comparison to the spot X price of Bitcoin, because at the end of the day, it's a narrative, and the narrative is pretty simple. Bitcoin goes up, MicroStrategy owns Bitcoin, MicroStrategy should go up. So I think it really comes down to, on the crypto plays, do you believe those stocks deserve to, or do you think those stocks will either go up or down based on the price of Bitcoin? Tesla right now, 165, down 5.65%. It's actually holding up pretty nicely. I think a lot of us thought it might collapse to that 158, 157 level, but people have bought the dip. It fell to 162 in the pre-markets, opened at 164, now at 165, and it's holding relatively strong in the first 10 minutes of the market, open at 165. And we'll see throughout the rest of the day if this thing collapses a bit under that level. The Philly Fed admitted they overshot payroll jobs by 800,000. Yeah, I mean, this is the big thing I think the economy is trying to deal with as well, which is that we definitely overestimated the number of jobs we had. Now, look, unemployment is still probably at 3.9%, even with those estimations. I don't think we're in the fours yet. And even if we are, 4.1 is not insanity. We get to 4.3, 4.4, that's when the Fed has to lower some rates. But until the data shows that, the Fed's not going to be lowering those rates. And as per their data, they think unemployment is relatively low. So it's going to be a question of if Jay Powell is able to time it correctly, because they obviously got inflation wrong in 2021. And I don't think Jay Powell wants his legacy to go down as the Fed chair that got two things wrong: inflation, and then when to cut rates. So I think his incentive is as strong as anyone else's is on the planet to get this right. But the question is when they'll ultimately figure out, when's the right time to cut these rates, or to potentially leave the rates higher for as long as they want to leave them. PayPal right now is 64. PayPal, so not too bad as well. I mean, PayPal was 67 last week, but the fact that it's retaining 64, a couple months ago, this would be at like $43.10 or something. So PayPal 64, not too bad. Palantir back at 21.88. Look at that. So it hit 22.07, got rejected at 22.07, was not enough to maintain those levels, back at $21.88. Now, year to date, Palantir, it kind of gives us something to fight for, though, right? Like, as Palantir shareholders, now we're up 30% year to date instead of 45%. It's kind of like when your stock is up so much, you kind of just are like, you have nothing to fight for. Right now, the stock's it's still up freaking 30% year to date. It's still amazing. If Palantir was at 21.88 by June and we slowly went up after earnings from like 16 to 17 to 18 to 19 every single month, we would be ecstatic, right? We would be like, oh, we've had if we were up 30% and it was June 2024, 6 months into the year, all of us would be like, this is great. The stock's up 30%. It's done awesome. But the stock's up 30% 3 months into the year after being up almost 55%. And now all of us are kind of, like, hey, what's going on? And I think the question is going to be, does this collapse back down to 20? Because then basically it wiped out all of its gains from earnings. Or is this a short-term little bump in the road and people are still excited to buy these shares as we make our leg forward? Market cap right now at $48.3 billion on Palantir. Amit, look at Jesse's moves. Okay, let's go to Jesse. What did he do today? I know he sold a ton of Robinhood yesterday. Because he was up 500%. I mean, like, you can't blame the guy, right? He's up a lot. Let's see what he did. So Jesse, friend of the channel, he runs, I think, a $2 million portfolio. So let's see what his moves were today. Wow. $750,000 he cleared up in cash today. What the fuck? Okay, so he sold 400 shares of Marathon, sold 5,000 shares of CleanSpark, sold 50 shares of Tesla, sold 1,300 shares of SoFi, sold 4,000 shares of CleanSpark, sold 5,000 shares of CleanSpark, sold 50 shares of MicroStrategy, sold 50 shares of MicroStrategy, sold 13,000 shares of Matterport, which he bought like on Friday. Look, I love Jesse. I really do. He's a friend of the channel. He does tend to act very, I would say, precipitously in his positions. And I think he would say that as well. Like, he's a not a trader, but he is very quick to move. I don't understand some of these moves, though. I mean, CleanSpark was at $20 all of last week and he wasn't selling. Now it's at 17. So I don't know exactly why, unless he thinks the market's going to collapse in a couple of days and therefore he needs cash to be able to buy the dip. But I just don't understand clearing up that much cash. And honestly, I love him. He's a good friend of mine, but I don't understand clearing up this much cash on one red day, unless you think the market's going to keep being red for the foreseeable future. But this is basically selling lower than his averages on most. I mean, he bought MicroStrategy at, like, if I'm not wrong, close to like 1,700, or maybe he has averages that are cheaper. Maybe, I don't know. Right. But Matterport, he bought like 2 days ago. So I don't know why he's selling that net right now. He literally bought CLSK yesterday at $20. Yeah, see, that's weird. I don't understand buying it at $20 or as at 19.20 or whatever it was yesterday, and then selling 10,000 shares of it today. I don't know. That's I guess he's raising cash for, like, I think it's not a bad strategy. It's just, you don't do this on a red day. You like you kind of, the whole point is to buy the dip on a red day, not to get so scared you get rid of everything. I mean, we still have a long time left in this Bitcoin. Didn't he make a video yesterday saying Bitcoin was going to 92,000 in the next 20 days? I'm pretty sure I watched that video at the airport because I was bored at the airport and I wanted to know why Bitcoin's going to 92,000. So, I don't know. Well, here's the thing, right? And Jesse's a seasoned investor. He's been doing it for a while. The red days can get even the best of people scared and get them to raise cash. So, at the end of the day, it's his cash. And if he wants to protect his cash, he's going to protect his cash and he's going to raise cash. I'm not raising any cash today because, quite frankly, I'm very concentrated into a couple of plays, and I don't really want to raise cash. I'm okay. I'd rather buy the dip on a lot of these. But I could understand how someone, I guess, would want to raise cash. I just think on a day like today, maybe this is not the time to raise cash. But again, I could be wrong, dude. I could be wrong. Maybe he has a different thought process on this. That's a weird move. That's a very weird move. I'll be honest. That is a really weird move. But it is what it is. There's nothing to understand. He just thinks the market is going to tank further. Yeah, I get it, but I don't understand how you think the market's going to tank further, but then you think yesterday the market's going to go up. You know what I mean? Like there's a little bit of a lack of a thesis there, is what I'm trying to say. Because if you're buying one day and then the next day the market's down 2% and you're selling everything, it's a little weird of a thesis, is all I'm trying to say. I don't blame the guy for selling. I mean, you got to sell. You raise your cash. It is what it is. Everyone has to make their own decisions. I'm just trying to understand his logic because I respect him. And I'm trying to understand why is he, what does he think that is happening that's causing him to make a dramatic move of taking that many profits? That's more so what I'm trying to understand. What is the thesis here? But maybe he just wants to raise cash. Maybe it is what it is. Yeah, Benny says, why didn't he sell CleanSpark yesterday at 20 if he thought he was going down? Well, here's the thing. Maybe he didn't expect Bitcoin to go down to 65,000 from 68, and he thinks Bitcoin's going lower. And if Bitcoin's going lower, CleanSpark's definitely going lower. So maybe he thinks that Bitcoin's definitely going lower. That's why he's selling. I mean, maybe his thesis might be as simple as, hey, I think Bitcoin is in a bad pattern right now, and it's going to collapse. And if Bitcoin collapses, a lot of his stocks, MicroStrategy, CleanSpark, Marathon, etc., they also collapse. Therefore, he's getting out of it before Bitcoin collapses, which is a super reasonable thesis, in my opinion. The question then becomes, is Bitcoin going to collapse after it already fell from 71 to 65? Like, that to me is a bit of a collapse. Does it collapse further than that? I don't know. I would trust Jesse on this because he understands the technicals way better than I do on something like Bitcoin. But if he thinks that's going to happen, maybe then you have to readjust your portfolio if you're really deep into Bitcoin stocks. Inflation is reaccelerating higher for longer. Yeah, well, here's the thing. I don't know. Inflation is reaccelerating, but it's not at the level where I think it's reaccelerating to the point where the Fed's going to hike rates. I think what is happening with inflation, here's my thing about the inflation narrative. And we all were really eager at looking at really good housing data that came out for inflation a couple of weeks ago. So it's not like there is a massive tone shift. What I believe is going to happen is the Fed is just going to be higher for longer up until July or August. But that's not that different from what they said 2 weeks ago. What they said was, hey, we're going to do 3 rate cuts, but we're going to wait for the data. The data is not amazing. The data is not horrible. PCE was not amazing. PCE was not horrible. ISM data yesterday was not amazing. It was not horrible. So to me, I don't think there is this massive, if we're going to be higher till the end of the year, we're not going to get any rate cuts unless the market's thinking we're not getting any rate cuts anymore. If the market's thinking we're not getting any rate cuts, yeah, things are going to get bad. I think we're going to get 1 or 2 rate cuts. I think it will just take time for that to happen. And I think we have a lot of lagging data that eventually will show itself up maybe in July and September. But for the next 4 or 5 months, yeah, inflation's an issue, reaccelerating to an extent, but not to the point where the Fed thinks they have to combat inflation by raising rates. I don't think that's happening. And if it is happening, if I'm wrong and the Fed does have to raise rates, then yeah, this whole market is screwed. If the Fed has to raise rates, we are unequivocally screwed. That's it. We're screwed. But I don't think that's the case. I don't think we have to raise rates. I think eventually we will cut them. We will have to be, that's not anything different. That's what Jay Powell said. He said, hey, we're not going to cut until we have good data at 2%, which basically means we need a good 6 months to let this play out. And in those next 6 months, I think we'll get 1 or 2 cuts. We'll definitely, I think, be at like 2.6, 2.7 on CPI. If we're not by that point, if we're still at 3.3, 3.4, yeah, we're screwed. And this whole year goes to shit. But I don't think that's going to happen. And maybe the market thinks today that's going to happen, which is why they're a little upset. Palantir, $22.14, back above $22. Where's Robinhood? Robinhood is $18.61. So that's up a little bit from that $18.20 level. Tesla, $166. That's now down 5% from $162. PayPal, $64.30. Bitcoin, $65,167. MicroStrategy, $14.88, down 9% instead of being down 10%. Google, $154. IWM, $204. NVIDIA, $882. NVIDIA basically flat. S&P, down 1% on the day, 0.94, which I think is very healthy for the S&P. I mean, the S&P has been going up, pretty consecutively. So being down 1% is not that crazy for the S&P. Celsius down at $79. That's down about 3%. Adobe 1.84, that's down 492. SMCI 986, that's down 4.88% on the day. Palantir 2208 as well. Matt R says, I bought some Amazon and PayPal leaps. Okay, so Matt R bought the dip. Yeah, let's do this in the chat. Okay, so there's 2 questions for the chat. 2 questions for the chat. All right, here are the questions. Number 1, what do you think is going to be the worst performing stock of Q2? Over the next 90 days, what is the worst performing stock? What is the best performing stock? That's the first question. So put it in one line. Put it in one line. Worst performing, best performing in one line. And I'll read all of them and I'll give you guys my thoughts. And then the second question is, what are you buying today? What are you buying today? So you can put all 3 in one comment. Worst stock, best stock, buying today. If you're buying anything today. Let's see. Let's see what people have to say. We asked this question last night on Finance Junkies, and I was curious to see how people were thinking about it. But I'm curious, what do you guys think will be the worst, the best, and the stock you're buying? Okay, so Chris says Boeing. Chris says Boeing will be the worst stock of 2024 Q2. Boeing right now down about 1%. DNA, someone says, will be the worst. Honestly, can't disagree with you. DNA has been pretty bad. Oh my God, DNA is 6 cents away from being below $1. Kathy hasn't bought it in a while, so DNA could be bad. DJT will be the worst. I want to say yes, because obviously we know this is a meme, but I think if Trump gets the Republican nomination, people might just buy it to buy it. So I definitely wouldn't short this. I mean, this thing could get a bit higher. Best is Apple. Carr says Apple. I actually agree. I think Apple from 168 from today's price, or from yesterday's opening price for Q1, I think Apple might surprise people. I think Apple might actually be one of the better Mag 7s, kind of pull a Google where it was stuck for a while and then broke out a little bit. P. Norton says best is Microsoft, worst is DNA. That's reasonable. Ali says best is Baba, worst is Apple. Okay, so you think Baba will be the best. I can't say that's horrible. There is some news on Alibaba I'll bring up in a second. I tweeted this a couple days ago, so I'll talk about that in a second. But I think Alibaba actually could do well. I think there are some things that can make Alibaba do well. The China risk is there, but I think some of that might be mitigated. You say worst is Apple, and you're buying Tesla today. Okay. Harry says he's buying more NVIDIA today. Raven says best is Snowflake, worst is CleanSpark. Okay, so that means you're bearish Bitcoin if you think worst will be CleanSpark. Snowflake right here, 156, down 2.43%. CleanSpark right now, 1701. Okay, so CleanSpark looking like it's right at that $16 range. Worst CMG, best SoFi. Worst CMG. CMG, Chipotle. Chipotle didn't do the split yet. Best is SoFi. I think SoFi might actually be the best as well. I think SoFi, if they crush earnings, the stock's back at $10, $11. And now, granted, the macro has to be there for SoFi to go to $10 or $11. So if SoFi's up, the whole market has to be up. I don't think SoFi could be a standalone $10 stock from $7 as the market is down. So SoFi is definitely going to have to be conducive to the macro environment. NVIDIA might take a breather before next earnings. Same with Palantir. Yeah, I think that's very reasonable. I think NVIDIA and Palantir both take a breather before next earnings. I don't think that's unreasonable at all. NVIDIA right now at 882, Palantir at 2197. Again, Palantir keeps falling below that $22 level. So there are sellers right there at that high 22 or low 22 to get it back down to 21. Jem says the best will be Palantir, the worst will be Boeing. Buying Palantir today. All right. Tiggy says best is Amazon, worst is Palantir. Michael says we are just getting screwed. Just keep buying the dip and don't over leverage yourself. If you're too rate sensitive, then you're prepared to grow over the years. Yeah, I agree. I would agree with that as well. Palantir best, they're going to crush Q1. It's going to be interesting. It's going to be interesting to see how it plays out. It's going to be really, really interesting. But I do think it's going to be a rather fun Q1 if these companies put up strong earnings. Just going to be where it ultimately ends up in the context of rate. All right, let's take a look at the big short investor, Steve Eisman. He's on CNBC today. He has some things to say about this market. This is the guy who called the 2008 financial crisis based on the mortgage-backed securities. Here's his thoughts on the state of the markets and where he thinks things are going.
This view on the Fed and the central bank's market impact. Steve Eisman, senior portfolio manager at Neuberger Berman, and we've had you on enough that I'm always a little bit hesitant to try to ask you for big picture, top down analysis, because a lot of times you don't really want to go there.
I actually have an opinion on this one.
Good, you have an opinion on this, but I'll just start by saying we're in kind of an interesting environment where we're definitely worried that the economy, for Fed reasons and for Fed cut reasons, we're worried that the economy is staying strong and that inflation.
I think it's more than staying strong. It's actually, I think there's been a reacceleration.
But we're also worried that there's going to be a recession because the Fed is going to have to engender one to tame it. So we're worried about the economy is too strong and there might be a recession. So
everybody's hoping for a little bear's porridge.
Exactly. Something just right. Because we're worried. And has that ever happened? Can we really orchestrate that?
Yeah, we have it right now. Everybody should just relax.
So is that your view right now?
My view is I feel that ever since Greenspan was in charge of the Fed has always been extremely insensitive to its own impact on markets. And, you know, when Powell said, was it last, I think it was last week, it feels like an eternity ago, that financial conditions are tight, I was like, what planet are you on? So, I mean, my view is the economy's fine. There should be, I personally think there should be no Fed cuts this year. And, you know, the market will do whatever the market does, but the economy's fine. And why would you cut? You know, my actual fear is that if the Fed were actually to cut rates, the market goes into it becomes, I guess, bubblicious. And then we have a real problem. So, you know, things are good. The Fed should do nothing and wait for data to get weak.
Which is pretty much what every regular person has been saying. Economy's good. Fed should wait. By the way, it's what Jay Powell has said. And so that's why I think the sell-off that we're seeing right now, it's not that insane because everyone knows the Fed will cut if they get the right data. And maybe that takes 6 months for it to happen. But the economy itself is not necessarily in the worst spot.
Because there's no weak data.
We still argue about, do you look at rates in absolute terms or do you look at them as,
you know, that debate bores me.
But in absolute terms,
really
they're not. In absolute terms, they don't seem high, but they're up 500 basis points.
So and has anything bad happened? Nothing bad.
No, that's
happened.
what I mean. I remember 7 and 8%, and businesses did just fine.
So the economy is good. I actually think, like I said, it's reaccelerated somewhat. Why would you? On what basis would you cut rates?
Some people think that the shock of 500 basis points is dislocated.
Yeah, well, they've been talking about that shock for the last 2 years, and the economy stays fine.
So what's causing the Fed to talk about 6 rate cuts 6 months ago?
My personal opinion is I think Powell is deep down is just a dove. He's always been a dove. Raising rates was out of character for him. He had to do it. And he wants to cut rates. But I at this point,
raising rates was not out of character. Didn't he raise in 2018 pretty aggressively as well? I don't know if I necessarily agree that it's out of character with him. And obviously he had to combat inflation, but I don't know if he's necessarily just a natural dove.
You know, not that anybody ever calls me, but, you know, I would just do nothing. Why would you do something when the economy is fine?
You don't think we need to raise?
No, I don't. But actually, my fear is that if they cut, then eventually we'll actually have to raise. That would be the worst possible thing that could possibly happen. So, you know, one of the things I've learned as a portfolio manager is maybe the hardest thing to do as a PM is to do nothing, because it's so easy to actually do something. And it's the same thing with the Fed. It's so easy to do something. They could cut whenever they want to cut. The hardest thing to do is just to sit back and say, okay, everything's fine. Let's just sit and wait. And if things get a little weak, then we can cut.
You don't think you said bubblicious. Are we pre-bubblicious yet? I mean, we're getting it.
I mean, look, the market, but the fundamentals are really good. You know, one thing I always think about is, you know, 1999, 2000, when the market definitely was in a bubble. But what killed the bubble was not that it was a bubble. What killed the bubble was that the Fed raised rates a lot and put the economy into recession. It was the recession that killed the bubble, not that it was just
so what do you think is driving this economy, though? Is it new productivity gains that somehow AI is coming?
I think the two big things that are happening right now. No, I don't think it's the liquidity per se. I think it's real fundamentals, that there's real AI, there's real investing, and there's tremendous amount of money being spent on infrastructure. And There's still a shortage of jobs, so the consumer is fine. It's a nice, it is little bear's porridge in a way. So why would you spoil it by raising rates, by lowering rates?
Just going back to like 2000, like the idea of a bubblicious situation at that point. You said it was the Fed raising rates that made it. I mean, the Fed raised rates and then made business models where you were making no profits.
Right, but today, the companies that people talk about are real companies that have real revenue, that have real earnings. I mean, look, NVIDIA's earnings have tripled.
That it wasn't necessarily the Fed just raising rates. The Fed raised rates, and then it was
but then the economy actually went into recession, and the speculation went out of the market.
Can I ask a question that may seem political? We are in an election year.
Yes.
And depending on the political channel you watch, you might be told that the economy is terrible and that folks are spending, inflation has run away.
Right.
Costs of everything are up. Everything is, the sky's falling.
Right.
And then I'm hearing you, as someone who's in the markets, say the economy is great and that this is actually like a Goldilocks.
Please
moment.
don't say that word Goldilocks. It's very sensitive.
Whatever you want to call it.
Little bear.
Larry Kudlow used to talk about that. He used to drive me nuts.
Whatever you think this sort of moment is, and I'm hoping that you can square the circle, if you will, of how these two ideas could exist, unless you just believe that one.
Say the Biden economy is great and it's not getting credit. It's really where we head with many guests.
But it's fair. It doesn't get credit. I mean, look, the unemployment is really low. Wages are still going up.
Wages are just finally going up.
Right, for the last few years.
They're below, people's spendable income is still below where it was when he took office.
That's fair, but the trend is up.
It has been,
and people still have savings. The only thing negative you could say is that there's been inflation, so some things are harder to buy and harder to buy.
But a little bit.
By the way, I mean, this guy's being pretty stoic here. He predicted the worst financial recession we had since the Great Depression in 2008. So when someone like him is not overly, being sort of upset or bearish on this broader market, and he's giving his reasons. It's not like he's just saying it to say it. I mean, we've heard all the reasons he's had in the past couple of minutes. I think that also gives you perspective on the fact that people are looking for a reason to sell, and today they got it. But I don't know how long that reason lasts. We'll let him finish up, and we'll go back to the markets.
30%.
But okay, that's fair. But inflation is starting to come down, or at least
it's not coming down. The rate of increase is coming down.
Right. Okay. But wages are still going up. All I can tell you is that
you're calling for deflation, which would be worse.
I'm not calling for it.
No, I'm saying, but
no, nobody wants that. But the price increases are in, and for everything.
That's fair. But the only thing I would just say is that there's no sign that the economy is weakening.
Right.
There are signs that the economy is getting a little
But if
stronger.
you're living on, if you're not lucky and you're not like us, you go to the grocery store and you're buying less than you did 3 years ago.
Okay, maybe. But still, things are still pretty good overall.
For us, things are pretty good.
No, for most of the people in the country, things are.
All right. So JOLTS data, you guys are saying, is out. I'm looking at it right now. So that's the job report data. Okay, we got it. All right. So here we go. Here's the jobs data. This also is the market going up a little bit right now? This data might have been kind of good. So let's look at this right now. Here we go.
Month revised to 8,748,000.
And revenues of only $4 million.
Turnover better than expected. Hi, Carl. Indeed, we see that 10-year note yields are at the high yields of the year as we see a slightly better look on job openings and labor turnover, better than expectations. But when you look in the rearview mirror, it's not better. As a matter of fact, last month's revised to 8,748,000. This month becomes 8,756,000. So we're really starting to congest right around and just slightly under 9 million. But these numbers are a significant cry from some of the high water marks of last year. We started last year at 10,425,000 jobs for some context.
That's not a bad thing, though. Last year we had 10 million jobs. This year we have 8.8 million. That means 2 million jobs got filled, right? So that's not the worst thing in the world. The JOLTS data seems to be pretty good. I'll let him keep talking and then we'll look at the market, but I think that's what's helping the market right now as well.
Now, factory orders, these are a February, fresh February, expecting up 1%, up 1.4, up 1.4. Pretty powerful. That's the best month-over-month positive change since November last year when it was up 2.6. If you strip out transportation, still remains a very lofty up 1.1%. and that is the best level since August of last year. Now, we switch gears here to durable goods. These are final numbers replacing mid-month reads. Our mid-month read was up 1.4. It now becomes up 1.3, up 1.3%. And that follows minus 6.9%, minus 6.9%. That was the worst, going all the way back to April of 2020. So a little bit of reversal there as we play a bit of catch up. And do remember the minus 0.8 in the rear view mirror on factory orders. Then you go to durable goods and you see that we really popped here. Ex transportation up 0.3, replaces up 0.5%. Capital good orders, non-defense ex aircraft remains at up 0.7%. And chip.
Okay, so the market likes this JOLTS data that came out. The market likes this JOLTS data that came out. Palantir 2210, S&P. S&P is down a little bit more. So, I mean, some of these stocks were covering just a little bit, not that much. The market kind of took the data in and they kind of liked it. Not really. I mean, so let's look at a couple things. MicroStrategy is at 1523. That was down 10%. Now that's down 7%. PayPal 64.61, Robinhood 18.81. That's up from about that $18-20 level. Tesla 165.95, still holding really strong. I mean, it's down 5% of the day, but it's not, at 162. SoFi up from 702 to 711. Palantir 22.14 up from 21.88. S&P 517. That one is still down on the day. CleanSpark 17.39. That one was up from 16.85 this morning. And then you got Google at 153. So overall, the market's not collapsing even further on jobs data, and it's because we are showing more jobs above expectations. February came in at 8.75 million versus 8.73, which means we have 200,000 jobs more than were expected. Is that jobs data a little iffy? Because are those real jobs? Are those jobs going to be turned over? Are those jobs that are basically jobs that, won't be there in another month because the Fed is going to readjust with the numbers that they had? Maybe. But the point is, on the short term, there's 8.75 million jobs open. More jobs means more opportunity for labor. More opportunity for labor means less unemployment. Less unemployment means a stronger economy. So that is one thing to think about in the context of this jobs data. But this job data is not the worst. It's definitely not the worst right now. We needed a good piece of jobs data to kind of deal with this market today. If that jobs data was bad, so for example, if this jobs data right now, we had 8.75 million jobs. If that's, let's say that was 8.6, let's say that was 8.71 million, and we came in 200,000 below 8.73, which was the expectation, the market would be pretty upset because that means unemployment is rising, which, yes, it means inflation will probably come down and won't be as sticky and we'll get a rate cut, but it means the actual health of the economy is in a tough situation. I would rather have stickier inflation with people having jobs, because we'll deal with the inflation eventually, even though it'll be tough, versus no inflation but no jobs. Because if you don't have jobs, companies don't have earnings. Like, I can't buy a MacBook if I'm not making money from my job, right? I need a job to pay me so I can buy a MacBook. Apple will not have shareholder appreciation for their shareholders if they can't show that they're selling enough MacBooks, and they can't sell MacBooks to people if people don't have the money to be able to finance a MacBook. They get the money from their job. So, like, I'd rather jobs over no inflation, because eventually inflation will come down, even though it's going to be tough. And I think the Fed feels the same, which is why that JOLTS data is really important for us to be able to see this this morning. All right, that's what we've got right now. Let's see what else we have. Let's see what else we're looking at. This is a very, very interesting market. Now, again, what Steve Eisman was saying is that he thinks the jobs data, or he thinks that the overall data is inconclusive in regards to a catastrophic state the economy's in, but rather it's actually very good data for the economy being strong, earnings being strong. He made the same argument a lot of people have been making, which is that earnings have been great and that these companies are justifying their numbers. And as a result of that, maybe we shouldn't be that scared of these earnings or of these companies doing well, because they are putting up the numbers they need to put out in order to show that that they're real companies and that they're legit at the end of the day. So it's interesting to hear that from Steve Eisman's perspective. Again, he predicted the Big Short. If he felt there was something brewing in the economy that was going to lead to a fundamental collapse, I think he would say so. I think the fact that he said, hey, things are okay, and it's not like 2008, coming from someone who predicted 2008, And he's not the guy who's predicting every next recession, right? That's Michael Burry. He's more like level-headed. To him, math is math, and the math is not mathing to a catastrophic recession. Rather, the math is mathing to a, hey, let's just wait and see until we get the right data. Kathy Wood, what did she buy? She bought 84,000 shares of Tesla yesterday, 171,000 shares of SoFi, and she sold 663,000 shares of Robinhood. Obviously, Robinhood has done very well, and ARK still has like 5% of their entire main fund in Robinhood. They have like 16 million shares. So it makes sense that they're taking some profits. Now, she did buy Tesla right before Tesla falls 6%. So it's what Kathy does. She also sold like I think like 500,000 to 1 million shares of Robinhood right before the gold card event, which I thought that made no sense, dude. Like she sold a lot right before or let's call it 1 million shares right before the gold card event. And I was like, dude, if me as one analyst thought the gold card event would go well, how does your team not have any inside info that gold card event is probably going to go okay? And maybe you should just wait a day before you sell. Like literally one day, you have got a better price. So really weird on those buys and sells, but it is what it is. That's what Kathy does. She also brought a crap ton of Roblox yesterday, 16,000 shares, and then 2,000 shares in another fund for Roblox, and then 6,000 shares for ARKW. So that's what Kathy did. The hood sells were to meet the 5% rule, I think, only for some of the funds. For the other funds, it was just straight out sells. And it is what it is. She has a lot of hoods, so it's not to blame her or anything. It's just like if she had waited one day, she would have got an even better price, which is good for Kathy, right? If you're going to get a good price, then get a good price. But she did take advantage of some of the upward momentum in hood. Now she's buying Tesla. And look, at the end of the day, selling Robinhood to buy Tesla, I understand. I get it. Like Tesla long-term versus Robinhood, I understand. But the timing of buying Tesla is interesting because I think she knew also Q1 numbers were going to suck. So I don't know why buy it right before the Q1 numbers. Like there is no analyst on planet Earth that thought Q1 numbers were going to be good. Now, no one thought it would be this bad, but everyone thought it was not going to be good. And you would think ARK's research team also says, hey, let's just wait a day. But no, they bought it right before. And I think they'll probably buy more today. At the same time, the event could have gone bad. Yeah, it could have. I'm just saying, like, my whole gripe with ARK has been they're a research firm that takes hundreds of millions of dollars in fees from their clients to do research. That's the competitive differentiation between ARK and any other fund. You give your money to Kathy because her research team identifies asymmetric opportunities and they invest. If you think these opportunities are asymmetric, you should have an understanding of what events and things would look like based on how the companies, right? Like you have so much research. Either you guys are not doing the research, you guys don't know how to do the research, or you guys aren't good at research. Because one could argue that you should know, hey, maybe let's wait for Tesla's delivery numbers to tank the stock and then buy more. Because why would you take investor funds and buy higher than you need to? You are short-term. You are not a long-term investor. You are literally the day-to-day. You run an ETF. You are supposed to get the best price possible for your investors. And it's the reason why ARK is down year-to-date. It's down 6% year-to-date, dude. The market has done phenomenal, and ARK is at $47, and it really just hasn't performed. So it's decisions like that make it hard to get super excited to put into ARK. 8.3% year-to-date. Yeah, it is down. Now she did buy SoFi yesterday. So she did buy SoFi. So she is seeing a little bit more undervaluation in SoFi. CleanSpark 1716, Snowflake 156, Alibaba 7308. Okay, let's talk Alibaba real quick. Alibaba is the most undervalued company that I've ever seen in the history of companies being undervalued. It is a fact. Alibaba is just undervalued. I think they have like 190 billion or something on cash, some ridiculous number. Market cap makes no sense. This might be the only reason to buy Alibaba, which I'm not going to do, but this might be the only reason. Chinese leader Xi Jinping, 3 days ago, met with American business leaders in Beijing, including Blackstone's Steven Schwarzman and Qualcomm's Cristiano Amon. The country is planning a major measure to comprehensive deepen reforms and build a first-class business environment. Basically, capitalism is starting over again in China. That is the argument that some people think can happen. I don't think that's going to happen. I think that's only going to happen if the Chinese citizens start to revolt against the government because they are fed up with the fact that not only do they not have social freedoms, but now the economy is shit. And when the economy is shit, people get really upset. So BABA is a buy. It is the most undervalued buy on the market if China actually becomes a capitalist country again and allows free markets to be free markets. But none of us trust that China will allow free markets to actually be free markets. And so if they're not going to be free markets, then we're probably not going to get an Alibaba that goes up, because investors just will not provide a liquidity if they don't think that China will reform. Market cap 182 billion, revenues of 130 billion. I mean, dude, this thing is insane in terms of this valuation. It has a PE of 8, guys. Alibaba should have a PE of like 30. It should be up there with the tech companies. It's one of the biggest tech companies in the world coming from that region. It should have a PE of at least 20, 24, 22. Give it like a 15 PE. It's at a PE of 8. That's where Meta was at. Meta was at a PE of 6 when it was at $88 back in 2022. So, I mean, this would have millions of investors screaming to buy those shares if they were anywhere other than China. That China risk is very real, and we're seeing it right now in the valuation when it comes to Alibaba. Palantir 2213, Robinhood 1895, SoFi 711, Nvidia 877. So Nvidia is still down from that 884 range. Robinhood trying to gear back up a little bit higher from that 1820 level. Palantir as well from 2188 to 2215. So there is selling at that 22 level, but there's a ton of buying at that 2188. We've seen it cross this 22 level 3 times over the past the past like 30, 40 minutes. And Bitcoin, look at that. Bitcoin from 64.7 at 944. It's 10:18, so 30 minutes later, it's at 65.7. So it's up $1,000 in 30 minutes. That's also the reason why some of these crypto stocks are doing a little bit better right now. Coinbase 242, CleanSpark 1714, Robinhood 1895, MicroStrategy 1512, down 8% on the day, but recovering from being down 10% on the day. Max 7, Apple 168, Microsoft 417, Meta 489, Google 154. Google doing the best today. Tesla 166. It's down, but it's not as down as we thought it was going to be. Nvidia 877, and then Amazon 179 for the day. All right, that's it for me. Amit, are you buying Tesla today? Probably not. Not buying Tesla today. If I do buy anything, it likely will be Palantir. And I'll let you guys know. If you follow me on Twitter, you will see me because I usually post my screenshots. So Twitter, I'm putting in the chat. It is in the description. Please make sure, if you're not following on Twitter, to follow on Twitter. And you'll see the updates all throughout the day. All right, folks, let's do word of the day. It's been a pretty exciting morning. Let's see what the word of the day is. Okay, this is an interesting one. Word of the day is chagrin.
Chagrin.
A feeling of vexation. Okay, what the hell is vexation? I gotta look up this word now. Vexation. A word of the word of the word. Vexation is the state of being annoyed. Okay, so a feeling of being annoyed marked by disappointment or humiliation. Chagrin. Much to his chagrin, it was evident that he had forgotten his lines in the school play. She tried to hide her chagrin when her presentation didn't go as planned. Yeah, if you're a Tesla shareholder today, I guess there's a feeling of chagrin, but there's also a feeling of we knew this was going to happen. So the stock is the stock. At the end of the day, interest rates need to come down for Tesla to really be able to get back into its groove. And 2024 is just a year to accumulate a good position because eventually this thing will play out. It just might take some time for it to play out, which is not that bad. All right. That's it for me. I'll see you guys 3:45. We'll see where this market goes. We got a couple hours till then. Been an interesting market as we opened it. And in a couple hours, we'll see how Bitcoin's doing, how Palantir's doing, and how some of these stocks end up performing in the next few hours. All right. That's it for me. I'll see you guys at 3:45. Thank you, everybody, for being here. See you in a few hours. Have a good day, everybody. Bye-bye.